Welcome to Power Lunch on this Wednesday afternoon alongside Kelly Evans. I'm Dominic Chu. We want to get straight into the market action right now. Some big earnings misses are sending stocks lower, and markedly so, as you can see there. We're talking specifically the technology space. The Nasdaq's down nearly 3%, a loss of 500 plus points at one point. By the way, this is going to be its worst day of the year and worst day going back to, I think, 2022 at this point. The S&P 500, you can see they're down almost 1.75% at this point, down 100 points, 54 the last trade there. And that tech-heavier Nasdaq composite, as I mentioned, down nearly 3%. Kelly, we're going to start things off with the key earnings movers of the day, as well as some of the names that are on deck so far. Alphabet being rattled by slowing advertising growth. Tesla losing some charge, if you want to look at it that way. Low expectations for Big Blue, despite some potential catalysts. And Chipotle may be biting off more than it can chew. So let's start with the Alphabet trade, down about 3% so far, now about 4.5% at this point. Steve Kovac joins us with the details on just why we're seeing the kind of price declines we're seeing in Alphabet today.
Yeah, Dom, and it's not just that decline in ad sales growth. It's also showing that it's been not really cheap to be an artificial intelligence hyperscaler. The theme of Alphabet earnings last night, and basically we can expect to see that continue next week when the cloud leaders Amazon and Microsoft report their earnings. Now, much of the conference call for Alphabet centered around how much Google plans to spend in capital expenditures to meet increasing AI demand. That means AI startups and big names like Meta and Anthropic running their AI systems on Google's cloud. CFO Ruth Porat said to expect at least $12 billion each quarter to build out more cloud AI capabilities. And CEO Sundar Pichai said it's a greater risk to underspend on CapEx, so he'd rather overspend and use anything